Unmute. Hopefully the audio isn't terrible here. Had a really great question from Patreon, so we'll go through that here in a second. Awesome, awesome. As you come in, please say hello. This has been a very high travel week, so I haven't done a live in a little while. Let's see. Thanks. Let's see. I don't know why this is like. Cool. All right. I was going to try to go live on Instagram, but it's acting weird. So we'll skip Instagram today. All right. Can y'all hear me okay? Or is it, I'm kind of in transit, so audio may not be the greatest, but let's pop in, see how it goes. Got GC. What's up, homie? Thanks for popping in. Sherry says audio is good. I certainly appreciate it. Just to know, okay, I'm not doing this, and then I get to the end and it's like terrible. Thanks, Sherry, and thank you for coming. Natasha, hey, I will be in Atlanta in probably a couple weeks. So hopefully it can connect. Sherry, Natasha, I know both of y'all are based there. Pirate School. It's been a while. I've been missing you, man. I've been missing you. Thanks for popping in. It gives us the R. Jay is one of our amazing brokers with Good Merger. Killed his first presentation to a private equity fund last night. Just amazing job. Literally, we'll use that recording for some training of the other folks. It was a great job. So kudos to you. What's up, Gertie? That's awesome. I never know. I'm glad you told me. Welcome. Gertie's a part of our PEFI 6. PEFI 6, one of the general partners and private equity managers. So awesome to have you. Yeah. You know, the only question is maybe YouTube won't be happy with the music, but yeah, just a little chill vibe. I think I found a spot where it was like not too loud, but in the background. Awesome. So let's jump in. Feel free to put any questions or any of that. I want to get into Jared's question. Jared is a part of the Assets, Cash Flow, Equity, Wealth Club that we have on Patreon. If you're interested in being a part of that, you go to patreon.com/Ace Chapman. And, you know, there are kind of two things there. One is obviously learn about buying businesses, learn about private equity, but there are a lot of these strategies that we use that you can use in your personal life as well. And I think this is one of them. And so Jared was saying, like, hey, in a previous video, I had mentioned in the Patreon that one of the strategies that we'll use if we own a business, whether it's in a private equity fund or just an individual owning a business, we will try at least to find opportunities in the stock market, in Bitcoin, in not Bitcoin, crypto, DeFi. We did quite a bit in DeFi, especially in 1 and 2. and then even in my public company where we own crypto. But the goal there is trying to figure out where are these opportunities where we can invest in something and get a really great return on the cash that's just sitting in that business. So in this case, we bought a business. It had about $50,000 in cash. And this is one of the benefits to doing private equity over buying a business. If you're buying a business, typically you're going to buy the assets out of that entity, and then the entity itself just goes with the owner. So all the credit that they have that they've built up over the time of owning that business, all of the cash that they may have in the bank, and any of those other kind of soft assets that don't go along with the main assets of the business, that stuff leaves with the entity, and you don't get to own that as the normal business buyer. With private equity, we're literally buying equity in that entity. So we get all of the credit that's been built up. So instead of just like buying the whole thing, we just own a percentage of that LLC. And if we have control, now we also have control of all the cash that sits in that bank account. And so, one of the reasons that I love investing the income from a business is that that income's going to come again the next month. So, in this case, the business has been around for about 8 years. We were very comfortable that it's going to continue to make some cash flow. So we decided to take a portion of that 50,000 and put into some investments. Now, when you're making these types of investments, it's important you're trying to minimize your downside. And his question was like, okay, how do I do this? So the first step is most people just keep their company's money in the bank. And so while it's just sitting there, even if it's just short-term things, that money's not earning any additional money. One of the first things that we want to do as a private equity fund is for that business, start to create each of the types of accounts that we want to buy assets from. So we want to create a business stock market account. We want a stock trading account. We want to create in a lot of cases, there has to be some kind of onboarding into the crypto space. So it's that onboarding account, which would be the ones you've heard of, BlockFi, something like that. And I'm not making any recommendations. We literally diversify. So we've used BlockFi, but we've used Gemini, which some of the investors are really the same there. But we use Kraken. So we try to diversify between the different businesses. So I give no recommendations. Your goal should be to diversify. But that just becomes an onboarding ramp to be able to get access to the things like DeFi. And I know a lot of people feel like, DeFi is too complicated for them. So we won't, we'll kind of stick today. We've had some of the stuff in DeFi is just outrageous. There's a thing right now, it's like a 900,000% return. It's completely nuts. But there's a lot of opportunity in the stock market. So an example of one of the trades we did in that particular business was Norwegian Cruise Lines. So obviously all travel was hit for a while. And so we got the account, we transferred some of that money over there that was just sitting there earning nothing until we did a distribution. And so what I'm looking for is how do we minimize the downside? And I'm not even looking for unlimited upside. How do I get a really great upside and limit my downside? And so that specific trade, it's at about $9. The stock was trading at that point. And but because people were really looking towards the future, the call options were trading at about $6. It's like $5.80. And so $5.80, and you could get the stock at $9. And so in that case, even if the stock went to zero, which would just be ridiculous, but hey, they had to take out a lot of debt. Who knows? They had a lot of assets, but they had to take out a lot of debt. So in that case, our maximum loss would have been, about $3. If we, if the stock didn't move up, it was a $10 option that we sold for about the $6. So if it went up to the $10, we made an additional dollar. Gracias. We made an additional in addition to the five, so that goes up to almost a $7 net on the $9 investment. Plus, we obviously get our $9 back, and so the risk reward there was just really amazing. And so that's the first part. When you're looking for those types of deals, it's just, man, maximize it. And I think in people's personal lives, they just don't maximize every opportunity. Now, how that, obviously that's a really great return. That represents about 60% return on the investment, closer to 70. How do we get it to the 100? Well, the great thing is you can use margin when you're buying that. So we want to use those two things in combination. Options give you leverage, and the use of margin gives you kind of an additional leverage. But the ultimate leverage is that money was just sitting there. And so by buying that business, it gave us this additional asset that we could then borrow against, double that 25,000, and the buying power, sell the option against that total. Now we want to go from that 150, let's call it, percent return to infinite returns. Well, after we get those funds back, we have a choice. We can go back and we can do another type of investment, or we can take those funds, we can put that as a down payment into another deal. What we decided to do was give basically a loan. So we did one of my favorite assets to loan is just or to have as just assets that are promissory notes that are backed by some kind of asset. And so we took those funds, and we had an opportunity that another fund wanted to do a deal. They were looking to raise a little bit of debt capital. So we took those funds and that we got from that call option and put that into into a loan. So we're basically part of the loan to them to buy that business. We got a kicker of some equity, but the most important thing was that asset, that loan asset. Most people are used to being on the loan being the debt to them, the liability. They're on the liability side of the debt. We want to be on the asset side of the debt. And so we create that asset. And now the income that comes from that ends up being an infinite return, because that money from the option really just kind of came out of, from space, literally, but from satellites connecting options buyers and sellers. But we get that. Now we go and we invest that. That becomes that infinite return. So hopefully, Jared, that answers your question. I'll leave this up for a little while, and we'll make this a Patreon only kind of explanation. And feel free when I post this in Patreon to ask any details, so we get into kind of the nitty gritty on this one, and then some of the trades and deals that we're looking at right now that I think could be similar types of deal structures. Awesome. Jay popped in. Thanks. Curtis says, hello all, great show. That's a great one to end on. Hope y'all have a productive day.